Hey guys, I'm Ivan.
And I'm Shawn.
And together we are the co-founders of
Quadrant.
So today we're going to talk about a very interesting topic, and that is
Inheritance tax and capital gain tax. Will we be having them in Singapore?
So what has happened is that on Straits Times, right, our MAS chief Ravi Menon came out and talked about using wealth tax to tackle income inequality. So what is this all about? It's about trying to close the gap, right, from the not so well-to-do and the well-to-do.
Yeah, so the issue is this, is that majority of the time I would say that most people build their wealth through property or ultimately basically us as Singaporeans have a lot of money in property itself. So you think about it, if the private property space prices keep going up, which has been the case because the government land has been more and more expensive, it's only natural that developer will have to sell at a higher price. Sell at a higher price means that if the people want to make more money, they will have to go higher, right? As compared to, let's say, if the government is trying to keep the public housing as affordable as possible, since ultimately they want every Singaporean to have a home or a roof over their head. Now, what will happen is this, private property keeps going up, which is pretty much 20% of the dwellings or population that will be living in private property, whereas 80% of population, prices of the property is being pressed down for a good reason due to affordability. Then we're going to see this huge wealth gap happening, and therefore this is becoming more concerning since the property gap or prices between HDB and private properties have been growing wider and wider.
So when it comes to implementing a wealth tax in Singapore, right, it can be in two forms. The first kind is an inheritance tax on real estate. So basically, right, if we are talking about non-real estate investments or capital, right, like for example, stocks, shares, right, this can actually be moved around easily. But when it comes to real estate, right, it's like harder for the rich, right, to actually like dispose of it.
Yeah, I mean, if you have a property in Singapore, it's only naturally that the Singapore government will be able to tax your property. Now, just for fun fact, guys, do you know that actually we have or used to have inheritance tax in Singapore? I just linked up this chart over here, right? So basically, it was 5% of your asset value, basically of up to $12 million, and of course above $12 million is actually 10%. So this was in between 1996 to 2008, then it abolished it, of course, since 2008 onwards.
So my take is that if we mark it to today's terms, right, for example 2021, I think it will be this 5% on a 20 million and above instead of like just the 12 million, purely because of inflation.
Yeah. So now I would say also the challenge is this. I mean, honestly, let's talk about it, right? Is 5% even significant enough to bring down the wealth gap between the private property and HDB?
I think that is like not the case not the main concern lah. What I see is that if this 5% is on the 20 million, right, then it means that majority of the population, right, don't need to be worried about this, because the majority of the the private apartments, right, it's going to be 1 mil plus 2 mil. It's going to be like way below this 20 mil mark. So if this happens, it's really mainly to tax the rich or the ultra high net worth.
Correct. So this is where I think it's a very big issue. Let me explain why. So the problem is this, is that most countries that actually implement inheritance tax, the end outcome is actually that most so-called citizens, they tend to get discouraged in building wealth, because the more they build, the more they need to pay a huge part of their assets that's being built to the government instead of passing on to the next generation. Since they're not incentivized to actually create more wealth, then what happens over here is that they tend to keep it a little more liquid, and therefore in many European countries we actually see home ownership rates are way lower. In Singapore we have about 90+% home ownership. It's not uncommon for European countries to see about 50-60% home ownership, and that is the result. I would say that's one of the main result or effect, alright, of inheritance tax. So now the challenge is about balancing how much percentage to actually tax or inheritance tax that actually will close up this wealth gap, but yet at the same time not big enough to discourage Singaporeans from even building wealth, because that will be horrible for the country if people start liquidating their portfolios in Singapore and start to move this money overseas.
So Shawn, I understand where you're coming from when you're talking about this inheritance tax. So my take is this: if the tax may be implemented for below 20 million, and if that happens, right, it's exactly as what you said. So my take is that maybe this inheritance tax will only happen for 20 mil and above. And what this means is that if I'm buying a regular home like that's 1 or 2 million or 3 million, it's not impacted by this inheritance tax at all. So ultimately, right, if only the rich are taxed, then it's actually helping the income inequality.
Yes, but then once again, that might then discourage the rich from continuously investing into Singapore. You see this? So it's a very weird balance, a very fine balance where the rich will think, hey, like that I might as well put my money in Australia, might as well put my money in UK. If UK have inheritance tax, Singapore also have inheritance tax, then why don't we go into a country where much bigger the economy and so on and so forth? So that's the very big fine balance that I think is a very big challenge for the, of course, chief of MES to really solve and think about. Alright, obviously I don't have the answer today, but all I can say is this: is that I think overall inheritance tax, too much is very unhealthy for the country on its whole. Too little, it doesn't solve any problem. So therefore, we want to look at potentially the other side of it, which is the capital gain tax. So the capital gain tax, I would say, ultimately do not really favor the rich or favor the poor, right? In a sense, right? It's more towards if you make money from property investment or you make money from your property, then you pay a percentage of that gains to the government. It's almost like a stamp duty. Yeah? You buy any property, you need to pay a stamp duty. So this doesn't really, favor the rich or favor the average, right? And in this scenario, since HDB, you think about it, since HDB is ultimately always going to be kept affordable, the probability of you being taxed capital gain tax is pretty much close to none. Therefore, most of the time, it will only be applied to the private property. But yet, if you think about it, if you get taxed or capital gain tax, you should ultimately be happy because it means that you made money from property. I think the last thing you want is to invest so much money into property and then you go get taxed in any single dollar when there's capital gain tax. It means that all your property investment lose money. I think that's the worst, it's even a worst case scenario, right? It's not good at all. Yeah.
Well, my take is that you're talking about investing in only one type of investment instrument, which is actually real estate. So, but if you compare stocks, right? For right now, there's no capital gains, right? What this means is that if I invest in real estate, I get this maybe 10% potential capital gains tax. But then if I invest in shares, right, or stocks and I get the same returns, but I don't get tax, right, ultimately stocks becomes a better investment instrument class. So this may be a second order effect, right, for people to switch classes of investment.
That is true, but ultimately, actually, if you think about it, but this does solve the main problem that the government is trying to solve. Other than just the wealth portion, but it's mainly the affordability home portion.
Why do you say that in terms of affordability? Because less people will be trying to be buying the properties and bring the prices down and it becomes affordable?
Yes, it becomes more affordable. I mean, the prices will likely move up slightly slower due to the fact that there's less attention towards it, and then due to capital gain tax. Then in this scenario, I think overall it might be a decent solution. So if ask me to implement one, actually I'm more in favor of them implementing capital gain tax over inheritance tax, because inheritance tax does discourage a lot of foreign money that comes to Singapore, and we are not a big country, so we are dependent on all these money investments into Singapore itself.
So what I'm hearing from you, right, is that if you're talking about discouraging people from buying their properties as an investment, right, this means that maybe when this law or this rule comes out, right, then property prices may go sideways in terms of being constant or even dip a bit. What do you think?
Yes, I think it will likely just grow slower. Let's put it that way. So with lesser attention, everything property investment is our property basically just always a demand supply issue, right? A willing buyer, willing seller, that's where prices go up. Yeah. So if people starts looking at property less as an investment vehicle, then of course that's when there is even lesser speculation. Lesser speculation means there's more controlled property pricing.
So let's talk a bit about this capital gains tax and what's happening in other countries, for example in Europe. So Shawn, what do you think is the situation in Europe with regards to this capital gains tax, and how may this translate into the Singapore context?
Yeah, so overseas, right, it's pretty common to see capital gain tax. It's not uncommon for me to see 20% to even up to 40% in capital gain tax in certain countries. So the thing is this, that it might look scary at the initial stage, but of course with this capital gain tax, typically there's also this thing called deductibles. So deductibles such as, for example, if you were to make 50,000 capital gain, you can minus out your stamp duty fee, you can minus out your lawyer fee, you can minus out all your depreciation of furnitures, and so on and so forth. So all this does get depreciated and does get deducted out, and the ultimate number that you ultimately get taxed on capital gains is typically much lesser as compared to what is actually published. Let's say for example 20%, but after deductibles, ultimately you only get taxed like maybe 6 to 8% based on the capital gains that you actually get. So overall, I think that all these deductibles does still encourage investors, but yet at the same time, I think for most people who just see 20% as capital gains, and those people who are less savvy tends to then avoid into this investment vehicle itself.
Yeah, well, ultimately, right, paying capital gains is fantastic because ultimately it means that we are making money.
Yes, yeah. So guys, I hope that you guys get a little bit more perspective in terms of inheritance tax or basically capital gains tax. Yeah? I think ultimately, Singapore will most likely, I feel, since they're already talking about it, the likelihood of this implementing it with a history as well of Singapore actually having inheritance tax, right? I think most likely it will likely happen. When it's going to happen, we do not know, but likely there are a lot of thinking and to think, really pretty much a lot of things to think about before they implement something like this, because this is a huge move by Singapore after abolishing the inheritance tax. And then of course that's where with Singapore also slowly coming out of this whole pandemic as well. Yeah, I think we even want to depend more on foreign investment coming in. So it's about the timing when to really implement this as well, to also ensure that Singapore economy continuously grow.
So I hope you learned something from this video. If you do, remember to give us a thumbs up and also subscribe to our channel. So once again, I'm Ivan.
I'm Shawn.
And we'll see you soon. Bye!